Hello, Gabe. We have another question here. Thought it'd be easier to, again, answer it in a video than to try to put some writing down. So let's get right into it. I've been lurking on this thread for a few weeks now, practicing from a structure analysis. I've watched your videos a couple of times each, and I wanted to say thank you in advance for your work, for the work you've put in. I'm trading a micro account, 10 cents a pip for practice, but I'm already seeing improvement of $9 this week. That's amazing. Great job. I was hoping you could clarify something on the structure analysis for me, because I'm afraid that if I don't have the expectation correct, the rest of the analysis begins to break down. That is true. All right, so let's get into it. When I have a retracement in line with the expectation happens after a failed initial move. When I have a retracement in line with the expectation happens after a failed initial move, does the new retracement high or low set the expectation limit? This is the first question, moving left to right. At which point is expectation broken? Okay. We'll address that. We see a failed new structural low at point A. Okay. Then a retracement to a lower high, point B. Okay. Then a previous lower high labeled lower high. Previous lower high labeled lower high. Okay. Is point B now the location to determine expectation failure? Yes, because you have a new structure low here. So now, once price breaks above B, your expectation changes. We'll cover that in greater detail. And once completed, a new structure low confirms it, or do we use a previous lower high? No, we use this one because we have on short term and the order flow that you seem to be following, you do have the new structure low. So this is actually A, B, C, D, or A, B, C, D. Okay. So you gotta drill down and figure out which order flow you're trading. But we'll look at your chart in greater detail. All right, so question number 2, moving right, the next question deals with expectation failure. Upon expectation failure, will there always be a new structure low into a new structure high leg, or vice versa, to set the expectation limit? Yes. Or after a new structure high, is the previous retracement point C? Yes. Point C is what will change the expectation. Okay. Is the initiative leg required to be an approximate harmonic height? No. Of the previous leg? No. We always expect it. We expect equal distance moves or one-to-ones, but it's definitely not required. Is there a break above the previous new structure point? Do you consider a new structure high? Yes. If so, I assume the failure of expectations would occur at point E. Point E. That is correct. After, you have this a little backwards. A, B, C. You're continuing here, it will be A, B, C, D, E, F. So there's a little bit of a, but let's get into the chart. Okay, so this is your chart here. At which point is the expectation broken? You have a lower high, new structure low, kind of retest there. Okay, that was a clue that this order flow is breaking down severely. Okay, and then you have a lot of ranging little price action here, and then we have a move down to retest this low. Okay, Now that is a retest, and then price comes up. So all of this here is considered a complex correction of this main swing. Okay. Now once price came up here and made this move here and then broke down, now we have a clear break below, close below this point and this point. So now you have a clearly defined new structure low. Okay. This is your lower high on the short term. On the long term is this. Okay, so you have to consider yourself. You have to consider what kind of trader are you. Okay, if you're a longer term trader, then a break above this would change the expectation. You're working off of clear highs and clear lows. Okay, if you're a more mid-range or immediate order flow or short-term trader, then you want to consider these swings as the swings that you're looking to capitalize on. Pardon me. So once price breaks above this, okay, and it did so in a complex correction also, as we see price came here, corrected down, retested this area, and then came back up. So you had a short-term ABCD pattern here that came back to test structure. Okay, and then price continued on into the expectation of a new structure high. Okay, so now that you have this, okay, in order for you to change your expectation back to the downside, C would have to be broken. Okay, so price came down here, found support here, and made a new structure high. Now for you to establish a new structure low, okay, you would have to get a break below this, and this is more in the short-term order flow. But what about in the longer term order flow? Okay, in the longer term order flow, this is your main swing right here. Okay, so until you break below this, this market is expected to do nothing but go higher in the long term. Okay, in the short term is different. That's why I ask you, what kind of trader are you, and what kind of trader you first need to establish what kind of trader you want to be. Okay, what does your schedule look like? How much time do you have to spend in front of the chart? Okay, can you spend time in front of the chart? If the answer is no, then you want to be more of a longer term trader, trade these longer term setups, and understand that you're going to be missing a lot of these unless you're just going to put limit orders in areas of interest and playing the probabilities as opposed to the actual strength and weakness of the chart. If you're more of a short term trader, then it would make more sense for you to identify an order flow that gives you opportunity within the time that you have to sit in front of your computer. Okay, so which is the low from which to determine expectation, and at which line does the expectation fail? Okay, so I answered that. Okay, if you're looking at this order flow here, okay, this is the clear swing. We have a clear low here, clear high here. This is a main swing. This is a correction. So a break below this would change the order flow. Now, once you made a new structure high here, now this is the main swing that you're correcting from here. Once you broke below that and closed below that, order flow, and then again change back to the downside. You expected a lower high followed by a new structure low, followed by a lower high, followed by a new structure low. Once you broke above this area here, okay, because this is the main swing, this is the correction of here. Once you broke above this area here, okay, order flow changed again back to the upside. Okay, I hope that answers your question. I know this is a short video, but it would have been a lot harder to explain this in real time, and I'm sorry, in a post. Is this new structure high initiative move is not as large as previous bull move? That's correct. Okay, although you had good momentum, okay, you did not achieve great projection. Again, projection, huge. Projection, shallow. Breakdown, right? There's breakdown all over the place. Overall, this is a range-bound market that's staying, it's finding resistance at this level here, somewhere between 6,800 and 6,850. It's finding a lot of supply. And it's also finding demand down here at these lows, somewhere between, 6,450 and 6,350. Okay, so you have a range-bound market, but within that range-bound market, you could use the order flow, drill down into smaller term order flows to help you understand, what is the next expectation, where is price expected to move next on a smaller scale, and then on a larger scale, and see which order flow complements your trading style and which one you want to capitalize on. It all takes you to the same place. It's not like if I follow the short-term order flow, I'm going to end up in a totally different direction. No, you're going to have more failures because you have more frequency. But when that expectations change, it's going to align you and keep aligning you more toward that longer-term order flow. Okay, so you just have to ask yourself, how busy do I want to be? Okay, how many trades am I looking to capture per day? Do I want to get into 1 or 2 trades and trade the longer term? Do I want to have 5 or 6 trades, trade the intermediate or short-term order flow? Okay, with more frequency comes more failures, but it doesn't mean that it's any less accurate. Because you have more frequency, you have more wins also. So the averages end up about the same, and you're going to end up in the exact same place. Okay, just ask yourself those questions and stay true to the order flow that you're trading. Okay, capture the expectation that is in line with the order flow that you're looking to capitalize on. Okay, that's all I have. Good luck.